What's going on, everybody? It is February 28th, 2024, daily log episode of Brand Q and the live stream review. Looking at the daily chart in here and the closure of today. Still a little bit indecisive to me. And again, I got this comment yesterday over one of my videos where they're stating how most of my predictions, actually some of them really, it was invalid a comment, but most of them do play out. But overnight, a lot of things can change. So a lot of the predictions that I do have on the daily log are not that meaningful. It's not something that you need to, cast iron and look at in the morning. If something changes, and even during the session, things change. You saw me today even do that. So don't put so much emphasis on what I'm saying. Take it with a grain of salt if I point to a direction. Of course, things change overnight. So I don't really have again, a clear bias in here, to be completely honest with you. I can see both sides. I could see where this could be a bearish order block and we could react off of that and send price lower tomorrow. It just makes me weary of all the buy side that we have engineered throughout the whole week that is resting above us. And the higher time frame still isn't a bearish institutional order flow. So I can't negate that. I can't, let go of that. We have 18 hours basically tomorrow, the closure of this monthly candle. Then Friday will open up a brand new monthly candle. So be a little bit of wild price action on Friday. I'm just gonna have to see. Tomorrow would be a really good indication leading into Friday where price probably will end up going. Because in here it's been difficult this week, right? At least in my eyes, it's been difficult. I mean, so far I've made it out basically a little bit above break even. So I've haven't taken many shots, haven't spent a lot of mental capital. I've been very touchy and aware of what price is doing. Again, this is my personal opinion and what I think on the market. I got this comment again yesterday where yesterday somebody said that yesterday was a day trading, scalpers gold mine. And in my eyes, no way, shape, or form has Monday or Tuesday been a very profitable environment to be inside of. And I don't recommend it to a newer student. I wouldn't advise it to a newer student. I don't think they're going to be profitable in it. So again, all of these lives, daily logs, they're all my personal opinion. So going down into the 4-hour chart, we're dropping off lower, and you can see we're respecting this Sibian here we drove up into. It's basically where I took out the last partial of today's trade. And in here, I'm weary of the idea. It's maybe premature, but we're no longer really respecting bullish PD arrays. We're kind of trading through them, even though there is buy side above here that's been engineered. It may be left for a different place, different point in time. It may not. So to me, it's no man's land. I could see it both ways. Currently, we're sitting at this place point in time. I could see it go both ways. I have to wait for enough information. I mean, the higher time frame is still bullish to me. The liquidity levels in terms of what is major, there's a major buy side liquidity pool that's resting above price. So it would make me weary unless I got a strong confirmation that price dropped lower and I could be willing to short it, then I would do so. Underneath us, we have we're resting inside of this BISI here. On the 4-hour chart, we have this inefficiency beneath price, and we have another one resting down here. So overall, if I was to be in a long bias, I really wouldn't prefer price drop down into this inefficiency or this one. I'd rather be left open as a breakaway gap. That's the way I'm viewing it. And if we were to go long, I would be looking at the buy side liquidity level here. As far as today and what happened, we dropped lower underneath sell side. And I was trying to determine if we were really going to drop off lower today or if we were going to see the reversal. And that's where me utilizing intraday liquidity gave me a bias, because there was such a clean level of buy side liquidity that was resting pre-open. I just couldn't see the idea of price not running it. And you guys saw price end up running it. I ended up getting stopped out on my first position, and price ran right directly to my overall targets. And then I eventually was able to get back into the market. So it was a beautiful example today of keeping composure, even after getting stopped out, price running directly to where your target was, and just keeping composure. I mean, if I was a newer student and I was developing and I saw somebody do that, I would be amazed. And I'm not trying to boost my own ego, but it's such a cool thing that I don't think many people recognize it. I mean, how many people can do that? Not many people can do that, where you're able to take a loss. Price takes you out by one handle. Think about this. Takes you out by one handle, runs directly to where you called price. You don't fear, you don't FOMO into price. I waited for my model to form. I get back into the market and you make back the loss that you had. I mean, it's astonishing. I mean, I'm really not trying to be boastful, but it truly, you have to appreciate it. If you don't, I mean, obviously you're not seeing it. And that's, you can lead a horse to water, but you can't make it drink. So as far as the 1 hour time frame, we drove up into this SIBI here, and that's ultimately what held price going lower. And this is where I took out my last partial because I wasn't really trying to stay in the position that long, and we were resting inside of the SIBI, the 4 hour. So this could give price leeway to drop lower, and we ultimately did. I think the PM session, lunch, everything else after the AM was really sloppy. The only really opportunity I saw was during the AM session. So if we drop down into lower time frames, I will show. Let's go in here. So this shaded area is the daily fair value gap. But as far as what happened in the AM session, the opening was here. Excuse me, it was here. We dropped off lower, taking out sell side, and I was annotating the SMT divergence between ES, NQ, and YM. So ES made a higher low, so it wasn't taking out this low, while NASDAQ and YM both were. So it's on a bit of a higher time frame. I get questions on SMT and what time frame you should look at it. I utilize all of them, but if it is on a higher time frame, much like narrative or any PD array, if it's on a higher time frame, then it's going to be a little bit more important. It has more significance behind it. So when I saw that ES was failing to do that, I was getting the idea, well, if I go down to lower time frames, I can start to see how the overall narrative is bullish on the higher time frame. We're taking out sell side liquidity with bullish SMT going into the silver bullet hour. We have a very clean level of buy side liquidity pre-open. So clean highs are going to be made jagged. So this level here is very clean. If you go down to the 1 minute, these highs are very clean. So I'm combining all those ideas. We have the RTH gap, which I don't have on the chart, but the RTH gap was above price. It was above the open. So I can utilize that for a bullish bias if I'm going long. And we did today. And what I was doing on the 1 minute where I got stopped out, and even in hindsight, I wouldn't have changed anything. There's nothing I would have changed. But if I waited a little bit longer, I still don't think I would have entered in here. If I waited for this to get above the 5 minute inversion, I was talking about this in real time, how the 5 minute SIBI, this was a SIBI, and then it got turned into an inversion. If I waited for this to get turned into an inversion, I maybe could have utilized this. And now I'm even looking at this in the hindsight, didn't even see this in real time, this small little inefficiency within the inversion. And then if you look to the left view, what's this down close candle? That is your bullish order block. So it's a decent setup there. But after taking a loss on that, I'm being very cautious. I'm not trying to get into the market emotionally. And sometimes I just can't see it. I'm being a little bit more cautious after a loss. But if I put the executions on, I'll show you if you weren't there. So I dropped down into a 1 minute with all the information I just went over. I was seeing how price got above this SIBI here. So this was our first point, was the inversion. Then we formed this inefficiency here. And I had a great entry, but then price ended up dropping off lower. My stop loss was going underneath the second fair value gap, or second candle that creates the fair value gap, which is my rule set. You have 1, 2, 3. So 3 candles create a fair value gap. My stop loss is going underneath the second one. So I can't see where wicks are going to obviously drop underneath. And this is where I stopped out if I put that on. I mean, it's less than a handle, basically, if I had it underneath this low. But that's not part of my rules. Would I change anything about my rules? No. I can't really see that incoming. I mean, maybe in the future I may put it underneath the third candle. That may be an adjustment I can make, but sometimes it does, this type of retracement rarely happens to me. So it's something, just a unique case where price did that. I mean, if you look at the bodies, they were telling the story inside of the inversion, inside of the fair value gap here. Look at the discount low. I mean, the bodies closed within it. Then we displaced higher. I was annotating this SIBI. I was waiting to see if it could get up above that, treat it as an inversion. I was probably willing to go long in it if it did, and it never did. You can see it delivered right to this buy side liquidity target that I was annotating. So this is what I mean by being right and wrong on analysis. It means nothing because I could be right on an analysis, but I could also be a loser, right? So don't put a lot of emphasis on being right or wrong. I could be wrong, but still make profits. I could be right and still lose. In this instance, it's a perfect example. I mean, when you're pulling out the pros and cons in your journal, especially for myself, I can look at today and be like, man, I held composure. I did exactly what I was supposed to do. Even after taking a loss, and I could still see the trade idea was valid. I didn't rush to get back into price. I would have entered in this area if a fair value gap like this formed in this area, but it didn't. There's nothing in here for me to probe along. Even though I still saw the idea as valid, there just wasn't anything in my model or my criteria for me to get back into the market. So I have to elect to sit on the sidelines. And what is that me doing? That's me exercising my discipline. Because, excuse me, if I just chase price because I was stopped out and I emotionally get into price, I feel like, the market was targeting me and I feel injustice that, price did that to me. I have to get back into the market. What the hell? And I can see price moving away. Okay, let me just emotionally get back into it. That's not part of rules. I mean, on the flip side, this thing could have easily done this and then just tore off lower, and I took another loss when that was not needed. So what I did was I was just waiting for price to print my model. And guess what? It delivered right to my targets without printing my model. But then I could see that there was still another level that I was looking for price to reach up into. And guess what? This is my model here. This fair value gap there with a large, nice energetic displacement. I'm going long inside of this. If you look at a 5-minute time frame, there's some more framework to it that you can utilize where you have that 5-minute fair value gap, which is the parent, and then you have to the left of you a breaker. So this up close candle, if you extend that out to your right, that's your bullish breaker. Why is that? Because you have a low, a high, a lower low, then a higher high. So this up close candle is your bullish breaker, and what's inside of it? A fair value gap here. And also you have on the 1-minute your fair value gap, and that's where I'm going long. I'm anticipating the rest of it to stay open. I'm not expecting a full deep retracement. I'm just expecting this to IOFED it and run right into the targets. And that's exactly what happened. So overall, I'm very satisfied, very proud of my executions and my management, everything that I did today. I don't care what anybody else thinks. Like overall, I did exactly what my system and what I know I'm supposed to do. Again, whenever you watch me, you watch somebody else, understand that they are their own person. They are their own unique person, and they built themselves into their own model and into their own rule sets. Giving critiques from the sidelines and sitting on the sidelines and typing random comments, it does nothing. You provide no value. You do nothing for the user. You do nothing for the audience. For those who are listening, who are constantly critiquing, constantly trying to comment on things, stop doing it. It does nothing for you. It does nothing for me. It's just a useless thing to do. You have to understand that everybody is so personal in their own trading and the way they view the market and the way they trade. Now, I can speak from authority because I'm actually profitable. I actually sit in a live market with a live audience, and I actually do this. So I have a bit of authority when I'm talking because I can show you proof that I know what I'm doing. So that's going to be it for today. Like I said, I'm a little irritated today with comments in social media. So excuse me and forgive me. My apologies for those. Again, I don't like to be like this, but I'm human. So that's going to be it for today's video. I'll be live 15 minutes before the open tomorrow.